In October 2023, the U.S. Consumer Price Index, CPI, data presented a promising shift in the inflation landscape, offering a glimpse of potential stabilization in consumer prices. This report is significant as it suggests a cooling off in inflationary pressures, a critical factor for economic stability and monetary policy decisions. Among the notable highlights, the headline CPI remained flat, defying the anticipated modest rise and marking a change from September's increase. The core CPI, excluding volatile food and energy costs, showed a modest rise, less than expected, reflecting a tempered inflationary trend. This data influenced market reactions, including a notable increase in Bitcoin's value and a positive shift in traditional market indices. Furthermore, these trends hint at a possible shift in the Federal Reserve's approach to interest rate hikes, indicating a potentially cautious future stance. Overall, the October 2023 CPI data paints a picture of an economy that might be starting to see the inflation battle turn a corner, potentially steering away from recession risks and towards a period of lower inflation. The U.S. Consumer Price Index, CPI, data for October 2023 revealed some encouraging trends, indicating a better-than-expected inflation scenario. Here are the key points. Headline CPI remained flat, contrary to the forecasts of a 0.1% rise. The headline CPI for October remained unchanged. This stability comes after September's 0.4% gain. This flat reading is a positive sign, suggesting that inflation might be cooling. Core CPI increase below expectations. The core CPI, which excludes volatile food and energy costs, rose by only 0.2% in October. This is lower than the expected 0.3% and equal to September's rise. Annually, the core CPI increased by 4.0%, slightly less than the anticipated 4.1% in September's figure. Bitcoin price reaction. Following the release of these data, Bitcoin's price experienced a near 1% increase, reaching just below $36,700. This suggests a positive market response to the inflation data. Year-over-year CPI analysis. On an annual basis, the CPI was up 3.2%, which is slightly lower than the expected 3% and down from 3.7% in September. Federal Reserve's response. The U.S. Federal Reserve, which has been pursuing monetary tightening for around 20 months, may consider another rate hike before ending this cycle. However, the latest data might influence their decisions, especially with core goods prices showing a decline in October. Market expectations for federal rate hikes. Before the CPI report, traders predicted an 86% chance of the Fed holding rates steady in December. Following the report, this probability jumped to 99.5%, with a 95.6% chance of a continued pause in January. Impact on traditional markets. Traditional markets reacted positively to the inflation news. The Nasdaq 100 futures saw a 1.9% gain, and S&P 500 futures were up by 1.4%. Moreover, the 10-year Treasury yield dropped by 16 basis points to 476%. October 2023 U.S. CPI data showed a stabilizing trend in inflation, with figures coming in below expectations. This has positively influenced both the cryptocurrency and traditional markets, and it may lead to a more cautious approach from the Federal Reserve regarding future rate hikes. The October 2023 U.S. Consumer Price Index, CPI, data reflected a notable stabilization in consumer prices, with several key takeaways. Stable consumer prices. In October, the U.S. consumer prices remained unchanged. A significant shift following September's 0.4% rise. This stability was partly due to a decrease in gasoline prices, which dropped 5.0%, helping to balance the ongoing increase in rental accommodation costs, softening core inflation. The core CPI, which excludes volatile food and energy costs, rose by just 0.2%, marking a smaller year-on-year gain of 4.0% in October compared to September's 4.1%. This is the smallest year-on-year rise since September 2021. Mixed price changes in various sectors, while rents continued to rise, albeit at a slower pace. Food prices saw a modest increase. Notably, grocery food inflation went up, driven by higher prices for meat, fish, and eggs. On the other hand, consumers experienced relief in areas such as airline fares, household furnishings, and operations. Prices for new motor vehicles decreased slightly, and there was a continued decline in used car and truck prices, albeit at a slower rate. Economic implications. The unchanged CPI reading and the slowing pace of rent increases suggest a cooling in inflationary pressures. This development led to a decline in U.S. Treasury yields and sparked a rally in the stock market. Christopher Rupke, chief economist at Food Bonds, interpreted these trends as a sign that the inflation battle might be turning a corner, potentially allowing the economy to avoid recession and experience lower inflation. Federal Reserve's monetary policy. With the disinflationary trend, there's a growing belief that the Federal Reserve's cycle of raising interest rates, which has seen an increase of 525 basis points since March 2022, might be nearing its end. October 2023 CPI data indicates a potential shift in the inflation trajectory, with key areas showing signs of stabilization and even decline. This could have broad implications for consumer confidence, market expectations, and the Federal Reserve's future monetary policy decisions. October 2023 U.S. Consumer Price Index, CPI, data, while showing certain positive trends, should be approached with cautious optimism rather than outright confidence in a turning inflationary tide. Firstly, the flat headline CPI, though seemingly a positive indicator, may not fully account for underlying economic complexities or the temporary nature of certain price stabilizations. For instance, the decrease in gasoline prices, a volatile component, played a significant role in this stability, which could easily reverse in the coming months. The core CPI's modest rise, while below expectations, still indicates ongoing inflationary pressures, particularly in sectors like housing and food, which directly impact everyday consumers. The positive market reactions, such as the surge in Bitcoin price and traditional market indices, might be more reflective of short-term investor sentiments rather than a long-term economic outlook. Furthermore, while the Federal Reserve's future rate hikes might be influenced by this data, it's too early to decisively conclude that their monetary tightening cycle is nearing its end. The overall economic landscape, including global factors and domestic fiscal policies, continues to present challenges that could offset the current trends in consumer prices. While the October CPI data offers some encouraging signs, it's imperative to maintain a balanced perspective, recognizing the potential for continued inflationary challenges and economic uncertainties. The October 2023 U.S. Consumer Price Index, CPI, data presents a complex picture of the current economic landscape. While there are encouraging signs of inflation stabilization, with a flat headline CPI and a core CPI increase lower than expected, these figures must be interpreted with a nuanced understanding of their broader context. The positive market reactions and potential implications for the Federal Reserve's policy indicate a cautiously optimistic outlook. the persistence of inflation in key sectors and the influence of volatile components like gasoline prices underscore the ongoing economic challenges. This mixed scenario suggests that while there are reasons to be hopeful about a shift in the inflation trajectory, it is crucial to remain vigilant and prepared for the uncertainties and fluctuations that characterize economic trends. The October CPI data, therefore, represents not just a momentary snapshot but a dynamic and evolving narrative of the U.S. economy, calling for a balanced and informed approach to future economic policy and personal financial planning.